Yes, good morning, everyone, and welcome to our Business and Bruce Tuesday, where we're giving you practical tips, especially tax season. We're just few weeks left, and I'm Christopher, a CEO and founder of YCO Tax. I'm also an IRS acceptance agent. So if you haven't filed your taxes, feel free to contact us and book a free 30-minute consultation. Today, we're just going to give you some practical tips and how you can get through this tax season more than the tax, but also the bookkeeping. Because they said the accurate bookkeeping is what you need in a good tax filing. So this is only less than 30 minutes. The questions we will answer it later at the end of this presentation. And if you want to book an appointment, please, I'll give you time to scan the QR code right now. But you would just see our website on Google. You can always get the 30-minute consultation on our website. Okay, so if you want to get a free copy of this presentation, all you have to do is to type your full name and email and type the word free and send it to 956-425 WYCO, or it's 956-425-9926. And the Q&A session is encouraged. We are currently live on our LinkedIn and Facebook, even on YouTube. Then you can follow us. There's a replay on our YouTube channel at Chris Y. Coco. Be part of our gift card raffle. Just a disclaimer, this material has been prepared for informational purposes only. It is not intended to provide and should not be relied for any tax, investment, legal, or accounting advice. Examples and other materials in this webinar are only for illustrative purpose and should not be relied upon technical answers. Wyco Tax is a virtual outsourced accounting and wealth planning service company, and Wyco Tax is not associated with any institutions on this presentation and is a private business providing resources for small businesses. So we're just gonna skip that part. So who should attend? People that have doctors we're targeting with their own companies, self-employed, work from home, people that receive 1099s, S corp LLCs, partnerships, with or without employees, non-accountants, and high-income professionals making more than $100,000 a year. This presentation is meant for you. But my question is, how organized is your books? Is it already up to date for 2024 or 2025? Because this year, or I mean, way back to 2022, the tsunami of audits started. There were 87,000 new agents been hired to audit small business owners, so you need to avoid the trial and error approach that will cause the IRS red flags that paralyzes your business. So typically, our client is this. Let's give her name Gloria. She owns a business clinic and she's preparing her tax and financial documents. So, what are the things she needs to keep in mind related to her financial documents? All right, so I typically create an acronym. So, our top 10 tips, type or write it down accountant. Okay, so letter A, you need to avoid mixtures of accounts. So when people tell me when is the best time, Christopher, to open a business bank account, that's the time when you already registered your LLC and get your EIN, or employer's identification number. Because some people they said, no, you know what, we're not gonna open it. They're just gonna open when they already have an income. So the ans that strategy is wrong, because even if you don't have income on your company, you can still deduct those expenses as what you call the startup cost, your marketing, your legal, professional fees, rent, lease, all of those can be deducted as part of your startup cost. But so many red flags, what they're doing is they're using their personal account to get those expenses, their personal credit cards. That's something that you should avoid, and do not commingle your transactions for personal and business. The IRS always would feel that you're not taking your business seriously. Next one, cut back on manual reporting. The days are gone when you are using shoe boxes, those receipts that, whenever you go to groceries, office supplies, gasoline stations, furnitures, Home Depot, do not use paper shoe boxes no more. There are electronic receipt app that you could download. One thing that we're using is the QuickBooks receipt that it can take a picture and then it can automatically upload to the app. Like it, and the good thing is, whenever you, the one thing that I don't like about cash transactions on the expenses, number one, whenever you get the receipt and you put it in shoe boxes, few weeks or days, that prints that it's in there, the numbers, the amount of expenses that you put there, they can easily be gone because they oxidizes. So that's going to be an empty paper. So I suggest that you link it on your QuickBooks app, the receipt tracker, and then it can automatically thrown to your QuickBooks account. Even you should also do not rely on paying independent contractor cash. So if Gloria has a clinic and then she needs to pay, she needs to require some those people to the contractor that she's hiring to submit her an invoice, and rather than paying them cash, because you don't want also people also pay through check. So in Gloria's case that owns a clinic, she doesn't want to use the check. You don't want to use the check because number one, you're exposing your routing and account number on your check and then the company name. It's so easy to hack your bank account if you're trying to do this kind of manual reporting. It also higher risk of it's also posing a higher risk of errors on your accounting or bookkeeping and whenever you do the reconciliation on your QuickBooks. The good thing about, you use your credit card, you can accumulate points. It increases that points, you can use it for travel or even on hotel reservation. So that's the reason why you want to use that effectively and then wisely. Okay, I don't encourage so many credit cards. There should only be one credit card and one checking account, or two checking account. Later I will explain. And then letter C, you have to count with experience. uh, Whenever you start a company, they said it is costly to invest in people that are doing it themselves rather than hiring a professional. If you're not confident, always when you start a business, always find the three people that you need. The first one is an accountant who's putting and checking all your numbers. Number two is the lender who's going to give you access to available money when you're starting, only if you're comfortable on borrowing money. And lastly is a lawyer. The lawyer will help you to avoid or minimize the risk of liability. All right, so those three people, you need to find that as your core group on your business. The question, when do you need to have them? Before you start the company. Foundation is so important. You're building your business in a stone rather than a sand, which means you're building them with reliable people that already have more than 10 years of experience, that already been there, done that, and they're giving you guidance. So you don't want to start all over again if you put your company in the wrong organization structure, or even taxation works. That's what matters. Every business entity has a different type of taxation. Next, letter O, you have to open and check your accounts. This is important. Even though you have a reliable bookkeeper or accountant, you need to also be familiarized with the different merchant transactions or accounts of your books, because sometimes there are subscriptions that you're no longer needed, so you can downgrade them. So for example, the CRM that you're using before, you need five users, but now you only need one, so you don't need to pay $800 per month. You could just pay less than 500, right? And then maybe sometimes you don't need those car wash subscriptions or other software subscriptions that you can downgrade. And also it helps you to monitor fraud, because there's always this chance. Like for me, I did switch from one a credit card to the other, then I'd notice that there is an ongoing transaction where this that I did not authorize. And then for the past 6 or 9 months, it's already been going on my credit card. So I was able to dispute. And for me, I like using credit card than debit card, because when you are using credit card, you could easily dispute compared than a debit card. So that's why it's so hassle free, and you have that peace of mind. So you have to be familiarized with the transactions. and with your both checking and credit card. So as much as possible, I always use credit card. Okay, next, utilize every deduction. Especially when you're starting the business, there are shared expenses. I mentioned this before. When you are starting a business, you have a home office expense, because anything when you use your home office, ordinary, necessary, and regularly for work and admin job, you can use that as a business deduction. So, for example, you have a 200 square feet home office and your size of your house is 1000, so 200 divided by 1000, that is 20% deductions to your indirect expenses. When we talk about indirect expenses, we're referring to utilities, property tax, lease. Those are the shared indirect expenses, because that's also being used as personal. Okay. What else? Meals. Right now, you're just eating, but if you're meeting clients and then you eat, you could actually deduct those meal expenses. All right. As long as you have the calendar that will allow you to monitor all your meetings. Okay. Let me see. I just have, okay, there you go. And then on top of that, you would also like to welcome to our attendees and listeners. Please type all your questions, and at the end of this, we will have a Q&A. Okay. We're talking now. We are now in the expenses. Okay. So okay. So the other one would be also travel. Whenever you use a car, you there's a person that they use, like Gloria, she used only one car. That is allowed as long as you're monitoring your mileage. So that is the gas, repair, travel, and insurance. Those kind of expenses are also deductible, as long as you know an accurate record keeping is very important. How can you track the mileage? We've been using and suggesting to use Mile IQ. So it automatically track the mileage. All you have to do is swipe right if it's business and swipe left if it's personal. Because this, at the end of the year, you would need to report and to give this to your tax professional, in able to put these expenses and to categorize just the business expense separate from the personal expense. What are the other deduction that you can use? The When you travel, let's say you go to California for business, for personal reason, you want to go to Disneyland, but you could actually, if you're 10 days there, you could attend maybe a 3-day conference somewhere there, like related to your industry. Like Gloria would like to attend continuous education on her career. So even it's majority of the travel or personal, the 3 days that she stayed there is a business expense. So the IRS allows you, do not be intimidated by the IRS, because actually we've been working with IRS auditors and they're there to help you to navigate and to provide more documentations needed. They're For me, my experience with them, they've been so accommodating. But you need to not ignore the letter when they sent you. Do not answer any phone call that says IRS. There's so many scammers. IRS don't call, don't send emails. They initially send you an IRS letter. Okay. So those are the only every deduction that you can do. Those are just the basic, but our company, we go more than this. For C Corporation, we help and operate and serve more than 10 states. Now, another thing, and this is one of the most commonly neglected of so many CEOs and high-level executives, they don't put themselves on payroll. You need to put yourself on payroll, because on Gloria's case, if she's spending, you know, to, 10,000 per month. Where is she going to get that? Because she still have kids that going to college, or she has kids that going to school. Where is she going to get the money to pay for the tuition? So that's the reason you need to put yourself on payroll in certain time. You cannot put yourself in payroll if your company is still negative. If Gloria making 2.3 million and then she still has 300,000 of income, she can start to put herself on payroll, maybe 200,000, depending. It should be a reasonable salary. How much salary ideally for Gloria's position on the company as a doctor? and as a manager in a given zip code. Okay, so there's always an average size or how much is the salary that she can put on herself, and that is what you call reasonable salary. So instead of her getting taxed from her company the 300,000, if she issue herself 200,000 on payroll, so therefore there's only 100,000 taxable income. All right, it's all about, mapping it, and then it's like the furniture in the house. You just want to make sure where you put your furniture. It's the same thing with this one. How will be your cash flow be positioned as an expense rather than an income for the company? All right, next we're down to the four tips. We also have tax savings benefits. So, like what I mentioned to Gloria, if she has a W-2, there are other things that she can put. Like, I know the most popular is a tax deferred product like 401k. She can also do a traditional or self directed IRA. What's the importance? Because this type of individual retirement accounts or IRA, even a 401k, if they put their money on this, that is not subject to tax this year. So going back to Gloria, let's say she has a 200,000 right on salary, and then she allotted out of 200,000, 20,000 on her 401k. So therefore, she's not being taxed on her personal the 200,000, but rather it's only 180,000 because the 401k, it's the 20,000 she allotted it for her retirement through the form of 401k. The IRA is the same thing. It has a tax deferred benefit. The other thing that people neglect is Roth IRA and then the life insurance. So this can all be put together, and your payroll can have this different layers on your payroll. So if you don't know, this is an advanced tax planning. That's why we open our financial services, because more than the tax compliance every year, we also make sure that your retirement money has tax optimization strategy and maximizing your cash when you retired at certain age. All right, then last down to the three, all tax forms will be needed. For people, if you are working full time, you're receiving W 2. If you're receiving your contractor, freelance, subcontractor, you're going to receive a 1099. You need to have that in place. All right, because let's say you have uh, 10 1099s and you only reported 8 1099s, guess what? The IRS will automatically send you a letter of underreported income, and that is subject to penalty. And you don't want that, okay? So make sure to ask this 1099s, and also you could, even though you don't have 1099s, you still have to put any cash income that you receive. Okay, so if you are have a mortgage, that's a 1098 mortgage statement. If you're going to school, that's a 1098 tuition fee statement. If you withdraw your 401k, that's a 1099-R. Okay, except you roll it over, that's not subject to tax. Second, neat and organized records. Did you know that you don't need to submit a PDF document via email, but you could actually give a guest access to your accountant, tax professional, bookkeeper using QuickBooks. So, with that being said, it actually protects your financial statements, and it's not going to be a loose documents. That's something that I really love about the QuickBooks. I mean, you don't need to use QuickBooks. You can use something different on your case that you feel comfortable. Zero, Wave, there are Jetpack. There are different accounting software for different industries. So that's why the first, if you're not gross income is not more than 250,000, you don't need to provide the balance sheet. It's only profit and loss for last year. Okay, so that is being done through the use of QuickBooks. And also for people that have K1, it's easy to navigate and distribute their if they are 50-50 with on the company. Then lastly, top priority report. These are the deadlines. So March 15 has been passed. If you're C Corp and partnership, that no no no. If you're an S Corp and partnership, that the deadline is already over. But if you are personal return and C corporation, or 1120 is due is this coming April 15. Okay, so if you haven't submitted your tax, it's okay to file an extension, but be careful if you haven't submitted your partnership and S S corp, it started to incur penalty since March 15. Okay, so there are questions like, do we need to submit first the personal before the partnership if you're in a partnership? The answer is wrong. You have to do first your partnership because it's due on March 15, and then you attach that K1 form to your personal return. Okay, so that is the basic top 10 tips to avoid any penalties and red flags from the IRS. Our company is simple how we are proactively helping to save you on taxes by the following services. We do your entity structure, we do your record keeping, business expenses, like payroll. We also have our business tax credits. We outsource for any tax credits that you may qualify, and then also the tax shelter plan. Then lastly is filing at the end of the year, which is right now April 15. All right, so that is all on our again, feel free to book us online if you have further questions, so we can customize the approach on your taxes. Okay, so thank you. If you guys have further questions, feel free to type, or you could actually ask me right now. For those our attendees, thank you for being here on our live chat today. I'm just gonna go over real quick on Facebook. Okay, so there's part of this recording. Again, just booked us on free 30-minute consultation on www.ycotax.com. It's www.ycotax.com. Thank you so much. I think there's that would be all on our presentation. We do this presentation every second and fourth Tuesday, 11 a.m. Central Time. Cole and Ellie, thank you, and feel free to reach out.